Good morning and welcome to the King Fib channel. If you're wanting to learn the fib tools, you have come to the right place. I've spent over a decade developing this skill set, and once mastered, it changed my trading life. I hope to change many others with this channel. I'm going to start with a 3-video set using the Fibonacci extension tool. This video, the proof of concept, I will introduce to you how I use the tool for measuring price movements. That's the key to the rest of the 3 videos. The second video, titled Secret Sauce, I will show you how the overnight price action establishes what's going to happen during the daytime or regular trading hours. And the third video, entitled Targeting, is a live recording showing how I use the technique in real time. It'll show how to make adjustments to your measurements and how to particularly view the entire cycle, which is the most important thing. The mindset of each cycle. I generally use the S&P futures for demonstrations, but this technique will work with almost any ticker that has plenty of liquidity. I do not recommend anyone use the 1-minute chart to trade by. I use it for demonstration purposes only because it has more cycles on the smaller time frames, and it's easier to keep this video engaging. If you find these videos helpful, please hit the like and subscribe buttons. That's the only way for me to judge whether I'm reaching the right group of traders, and the only reason for me to add more content to this channel. These first 3 videos, I'm mainly talking about my 2-step method. This page is my trading plan or my set of rules. I don't want you to spend a lot of time trying to memorize these rules at this point in time. I only offer them now just to read it over and get a very general idea of what you're about to learn. And at the end of the 3rd video, I'll repost them again. If this is something that you want to try, you will need to commit these to memory, and you can print them out at that time. And please, please, paper trade any new ideas before you take them into your live trading. So if you need to, pause this video and read them over, and when you're done, we'll move on and get started with how to find the cycles. So I need to start out by what it is that I'm measuring. And when I measure something, what I'm looking for is how far is a major entity willing to push price before they slow down. In other words, they don't want to push price any higher. They want to let it settle sideways, or they want to let it come down, or they may even force it down to take profit of what they purchase in this area. So one of the things that I do is each one of these are zones. I'll call them steps, but mainly they'll be zone, and each zone has 2 other zones, and I'll refer to them as quadrants. Now what I expect is, for the most part, when the price slows or stops, I expect it to come back to here. The green area is my buy zone. Whenever it comes back down through to this 0.5 area, which I only have the 0.25 and the 0.75 in here for the purpose of the demonstration of the quadrants. Let me see if I can, there we go. All they're doing is representing the quadrants. I usually don't use them. It's for this demonstration only. Let me undo. And if you'll see, what I mainly have is multiples of 0.5. I do have the 1217, but that could just as easily be 1.25. And the only reason why I keep that in there is because so many people are using it. I uh, I don't set it as my default. I'll use it every once in a while depending on how I'm gonna, if I'm looking for symmetry or something like that. The rest of it, everything is a multiple of 0.5. And sometimes I'll extend these out going up to there, but for the most part, when a pattern reaches the 200, then it's complete, and from there I'll demonstrate what it is that I do. Let me see. Let me take these off since I got blocks here. Okay, so like I said, my main expectation is when I find an area where price has stopped pushing, I expect it to come back down to the 0.5. This is my buy zone, and really, the truth is, how's it going to let me hit? My buy zone is probably a little bit smaller than the quadrant. This one would be the buy or the short zone in a downward motion. And if I do well, don't get too far ahead of myself. This is the buy zone for any bullish trend. I expect it to go to the 1.5. That's an expectation. Can it go to the 2? Sure. Can it go to the 2.5 or the 3? I have seen it go 5 different zones before it took a break. Uh, the majority of the time, it goes to the 1.5. Just a little less than that percentage, it goes to the 200. I My expectation is though that it does just like this, an ABC pattern to the 1.5. There are ways to know whether it's going to come to the 200. One of those is if price slows here and stays in this zone or doesn't what I call an S curve, which hangs around here. A lot of people consider that a bull flag, and that's you know entirely the way somebody may refer to it. But in my view, it's an S curve around here, or it does not get anywhere close to here. It's going to the 200. That's my expectation every single time. There are things that can get in the way. If it gets up here and does not get close to here, I expect it to come all the way back down to here. These are my expectations, and as I demonstrate, uh, by using price action here in a minute, you'll see what I mean. Now, if I'm going to measure a downward trend, let's see. Let's just It's just the opposite. I guess I could have done that a little better. Okay. And when I do my downward, I always change the colors. And you'll see that because I keep multiple measurements on a single chart, it's imperative that I know. It's imperative that I know which way the measurement's going. Okay, so in the same respect, just in inverse, upside down, come down to here. It's going to come up to here. This is my short zone, and I expect it to come down here. Now, what if this does not happen? What are my exits and what is my price? What is my price ratio? If you look at, let's take this off. If you look at this, if I'm buying here and expect it to go here, it's going to go through 1, 2, 3, 4 quadrants or 2 zones, and that's my price target. So I have a 4 ratio, and I'm gonna call it to 1 because here's my exits. If it closes below the 0.5 and then breaks the low of that candle, and it could do it in the next 2 candles, 3 candles, whatever. close in this area. Let me put it back to where it was. A close in this zone and then a break of the low is an automatic exit when I buy here. The other exit that I have is if it closes in this zone, I'm out. That's an automatic exit. So I can basically claim that I have a 4-to-1 ratio for any of my trades, and everything happens in reverse if I'm playing a short or a downward bearish chart. So that's my basic rules. As I go through the demonstration today, there'll be more. You can see more detailed version of this in the process video. Let me delete these. Come on, what's the deal? Okay, this chart is a yearly chart. I'm going to show the diversification of this concept. 2025 today, back to 1985 as far as this goes. Back when I had Trade Navigator, it actually would let me go back to I think it was the 20s, and the concept still worked even that far back. So what I'm looking for is the initial move off of a bottom to where price slows down, and there are a couple of them right here, but I'm going to choose this for simplicity purposes. And because I do not know whether this is a bottom, I will set this lower mark at 0. This mark right here, I'm going to set to 0. Just because I don't know whether that's a bottom back here in like 1983. I need the full measurement for everything to work. Well, as you can see, where it slows down, it comes back to the 0.5. And it will come up here to the 1.5. It does it again here. This was the dot-com bust. This is the financial crisis of '08. And I was surprised when I looked at this and saw that they both came back to basically the same level. Now, I'll expand these up. There we go. And this is where we are today. This is off of this first run here that I've measured, and there are plenty of places in here where I could have used it. If I go back down to a monthly chart, I can get a better view of these levels. And as you can see here, it's not always going to be a top. It's not always going to be a bottom. And this is where I differ from a lot of people's concepts of how to use measurements. One thing, I don't use Fibonacci sequence at all. These are all just multiples of 0.5. It's more of a logical process for me. So if we look at this, what I do during the day or during the week is I'll be looking for, let's see, yeah, I'll use this one. I always have to make the 0.5s a different color because they're so much more important. Okay, basic concept. If I find where I get price to slow down, even coming downwards, I need it to come back to the 0.5. If it does not make it, this one's fairly close. I still would expect that to go to the 1.5. However, I also in the back of my mind say that it did not make it back to here, that it's going to come down to the 2. Now on this particular model, I'm just going to expand it. Usually once it reaches the 2, I would do something like this. I would start looking for a different, right there. I'd start looking for a different slowdown of price, which would be right here, and it came to the 1.5 down here. But for this purposes, I'm just showing you how you can start by finding the first downward move, which is probably here, but you keep expanding it until you get to a a pattern that you're familiar with, or in this case, I'm familiar with this type of pattern right here where it comes back and almost touches the 0.5. This sets my levels for the rest of this run. Now, how do I know that the run is over? What makes these not worthy of a bounce? Well, if I looked at the daily chart or even down lower to a 4 hour, there may be small bounces in here, but on this pattern, I'd be looking at this to come down to here and expect it to go to here. Since it broke all the way up and could not make it there, I'm leery about that in the first place. I'd be more bearish. And I keep more bearish until I get to the levels that I'm looking for. The 2 is a completion of the pattern. And like I said, I can duplicate this and show that it goes down to the 1.5 of this pattern. So now if I wanted to check it on the way back up, I can see here that that line held, and so that would probably be a good one. We have a double bottom here, which would have not necessarily allowed this one to work. So you got a break of the low or the 0.5, and then you got a break of that low. So that would have got me out. But I will put a caveat in there. If it recovers quickly, then I'm probably no longer bearish uh, in this particular case. But you can see where these levels are respected all the way back up. And that's what I look for is the levels that the entities, computers, algorithms, market makers, whatever, that's the lines in the sand that I'm looking for. So let's see here, because I remember this. This did not, I'm going to delete these for a minute. This I would have been expecting to come up here. So if I started measuring, let's see, I'm going to skip a lot of these and try to find the major lines, and that's it right there. Okay, so we have a pattern. Down, couldn't make it to the 0.5, so I expect it to go to the 2. Now, I would still take most of my profit when it hits the 1.5 because that's my 4-to-1 ratio, and this happens more often than it breaking through the 0.5 and I get stopped out. So I take most of my profit here. The rest of it I automatically take here. And I'll watch for another pattern to happen on a smaller time frame. But let's see how long this level continues. A little bit of respect. We're starting an S pattern right here where it goes above, comes back, goes below, comes back down to here. So I'm wondering, let's duplicate it and go to here. Okay, get rid of this one. Let's see if at this S pattern we get to the 200, which is up here. I see the 1.5 is overlapping with something else that I've already got set up. Oh, that's that longer term cycle. Okay, so if I'm correct, this was the 1.5 from what I showed earlier, but I want to gauge this S pattern right through here, see if it goes to the, oh, it did go to the 200 right there. Okay, So that proved the S pattern works. And a lot of, like I said, a lot of people call this a bull flag. But I'm showing a more specific way to measure it and to use it. I don't think a lot of the less experienced traders understand that there is a specific way to use this, and that it's not just a bull flag for being a bull flag, and that means that it's bullish. What I'm teaching with this concept is the mentality that a trader should have in each of these zones. And when it comes back to the right quadrant to buy, your buy to exit ratio of 4 to 1. Um, let's see. I'm going to take this back off. Now, this, I'll go back to the year. This was the very first one I do. And anytime I look at any kind of stock, I go back as far as I can so that I can set these levels. Now, look at it through here, it may not look like it respected this level, but if I go back to the monthly chart, it definitely did right through here. And look where we are before the Trump tariff, what was it, Liberation Day? We're sitting right there on it. So, and back in 1984, what was it? Back in 2000, I could have told you that there were going to be these levels, and I'll show you the next one, that there would have been these levels to watch out for, to be cautious around. Okay, so the next major level is up around 68.50. Okay, it respected that level pretty well. It respected this level pretty well, even though it broke above. It came back down, and that's one of my rules: is if it recovers or retreats quickly, then I expect it to come down through the next zone. Same thing here, it broke below here, but it recovered quickly. And I need the rule that it has to close here and break that high for me to start getting bullish again. So let's look at something a little bit closer. These are very long-term stuff. And let's look at a daily chart. See what. Okay, here we go. This is February the 19th. You see down here. This was Liberation Day. Now, in this particular incident, I remember this was probably my first measurement. But as the price kept coming down and it wasn't going back and touching the 0.5, I kept bringing it down until I get to where it touches, and then I expect it to come to the 1.5 and then the 200. Eventually, this turned into this, where you've got 2 steps down, 1 step up, and I expect it, if it loses this level, that it's going to come to here. Even though it blew right past here, I'll look at the 4 hour later to see if it hesitated at all. It came down, so it went through 1, 2, 3 zones. Like I said before, I have seen it go 5 zones, but those are very, very rare. Uh, 2 zones is not out of being normal. 3, I would not consider that being out of normal either. But my expectation is when it hits the 200, I'm out. I just am, and I'll wait for my next setup because that's where my odds are increased. Now, in this particular uh, setup here, I probably would have started back here, where you've got this, it came through, but it did recover. I would have been stopped out here if I was using a daily chart. Now, if I'm using a 30-minute chart, everything's different. But for this particular instance, uh, I'm stopped out. And a lot of times I will end up going back and remeasuring from this level. Okay, right there. Now, 2 steps up, 1 step back. It it closed below here, but it did not break that. So even on a daily basis, I'm expected to come back up to the 1.5 is right there in this area. I don't know if you can see it or not, but it's it is respecting the same levels as it came down with, and that's what I like to see, because now there's the 200 of this bullish run that we're on right now. And so I'm expected to come up here as long as it can stay above this zone. Let me delete this down. So as long as it can stay above this zone, we don't get a close and a break of a low, I'm expecting it to go to right here. Now where can it go from there? I'll just add another one. That would be 64.84. So that would be the next one. Now let's do this, because so many people do this. Come on now. There we go. And this is the only reason why I kept that 1.2 right there. Ah, look at that. So this is pointing to here. But if I expand it to here, it's pointing to the 1.217, which so many people use. So this is a major target for this is a major target, but so is this. And that's because they're lining up so well. Now, let's get down to a little bit lower time frame. Nah, I'm going to delete a lot of this stuff. In fact, I think that was a longer term one. Started at 3.895. Yeah, that's the longer term one. Let me. Okay. Let's look at that on a 4-hour chart. Same thing as what it was on the daily. We still don't have a breakdown here. We did here though. Was it in the overnight hours? Yeah, this was probably, that's 12 o'clock now. That'd been during the day. And so while we're here, excuse me, I'm looking at something right here. Let's look at on a little bit closer of a 4-hour. And I can tell you right here that I see a pattern that is right in here to start with. There we go. Pattern, S curve, goes to the 1.5, goes to the 200. Once it hits the 200, sometimes I will expand it, depending on what the price action was, which leads me to believe this could be a level. The other thing I'll do is duplicate it, and this brings what was the 100, the first move, now becomes the 0.5, and I'll see where this is targeting, whether it's targeting any of the other levels, or if let's see. Oh, there it is. Or if it's targeting the VWAP, or the volume profile, excuse me. I cannot do a video on something that's happened after the fact, which is volume profile. Here you can, because I'm using it on a longer term basis, larger cycles. But if I want to get down into the nitty gritty of like a 1 minute or a 5 minute chart, like 1 minute, then these profiles have already expanded by the time that we're here, and it looked different before, so I couldn't use them. Let's see what we got here. Just so this is something I went into the live recordings. There we go. So yeah, it makes an S curve here. Didn't respect that, but it did come back down to here, and it did almost get up there. I tell you, it makes a difference whether it makes it up or not. Can't remember if that was the day Trump and Elon were having their arguments or not. Um, Here would be my first move here. There again. Up two, back one, up two, back one, up two, back one. Of course, it came all the way back down to here. So I could either expand this and use that as my target, or I could duplicate this. Sometimes I do both. Oh, what am I doing? There we go. Duplicate. Use the old 100 as the 0.5, and then use this. And what the difference is whether I expand the first one or do the second one is it's a matter of cycles. Do I want to measure the larger cycle, or do I want to continue with the smaller cycle? And it's basically the same thing as looking at different time frames. You know, a lot of people use the 5 minute versus the 30 or 4 hour or whatever. I I'm measuring all the cycles in my head. I want to look at all the cycles. And at this point, when this didn't make it up to this 1.5, I know something's in trouble. And sure enough, it comes back down. And I can do the same thing for, let's see, here we go. This is probably, that could be it. This could be it. Let me see. Let's see. Yeah, we'd consider that probably it. Let me look at this for a minute. Let's look here. Let's consider, because I don't have a way to evaluate the halfway point here, that was probably what I was looking at Friday morning. That was 6-6. So yeah, that was Friday morning. So what I was measuring was how far did they push it up here. And you couldn't make that measurement here, but as it came across and I saw this level, I would start measuring here. This is a 1 minute chart, so I have no way of knowing whether there was anything to slow it down here. But as long as it doesn't come down to here, I'm expecting it to go to the 2. If it doesn't make it to the 2, then it's showing me there's an issue. And sure enough, there was an issue because it never tried to get back all the way back up. None of these patterns during the day showed me that it wanted to go back up there. This one did. This one was showing me it wanted to break up here, but when it didn't get to here and it broke down here, then I knew that pattern or that cycle was in trouble. Uh, Downward cycles. These are kind of small, but just a reference. There's the cycle. There's the point. Comes down to the 100. Almost gets back there. That's really close enough for me to expect it to come down to here. Comes back up. Comes back to the 2. Comes back up here. It just continues 2 steps forward, 1 step back. And that's what I keep looking for. And I know for most people that is just a basic ABC pattern, but when you use it to where you expand the levels, then it becomes something else. And right here, this quickly recovered this zone. So I'm more, I don't want to say bullish at this point, but it gives me caution that it's over with, that this run down is over with. We've already created the 2. As it comes further, I get more and more cautious about it needing a good retracement. And so what does it do? It comes up here, it fails pretty quickly. It kind of does this S curve thing. But let's look at something right here. Okay, that would have been my mark most likely. I could have done this. In fact, I probably would have done this after these candles were made. Uh, and what am I looking at? Price has slowed right here. Even though it continues up to here, price has actually slowed for me right here. Now, is this an important level? I can see a couple more candles where it respected that level. So by the time this comes down to here, stops here, I'm confident in this move or this measurement for this entire cycle. Now, this is what throws a lot of people off. They want to measure all the way up to here. That's not me. See where this is the one. Let me delete this. See where it respected this 1.5 level. I'm not sure. Let's see if you measured this, what kind of results you would get. Messy, messy. And this one, okay, well, it respected this one. But this was creating an S curve right there. Of course, it's too late in the day. It's already 12:30. Let's see what happens if I double this. Oh, duplicate. So I'm just going to duplicate this for that S curve and see if it goes to the 200. And it does, but it had trouble getting over this cycle measurement. So that algorithm is still intact that's from earlier in the day. No, wait. Hold on. Yeah, that was from earlier in the day right here. And these do play upon themselves. There are multiple algorithms working that can change stuff. Like if I would have measured this one to the downside, from the very beginning of the day, it actually creates what I would call a neutral zone where I'm bearish below this, bullish above this, And this is early on in the day. You can play other cycles throughout the day, but this seems to be respected a lot throughout the day, that these first two levels have created like a neutral zone. So there are multiple algorithms that are in play at any one time. I don't expect one major entity to be able to control the entire market, but a lot of times I find that they are playing together. So hope you found this interesting. This is my proof of concept, and I will put out a third video or another video that of live trading that about targeting, and a lot of it will be targeting the VP levels or the VWAP. I forgot my VWAP over here in the extended area, and I keep weekly point of control, weekly VWAP. Those are over here. They were down here this week, and this is my dailies right here. And they move throughout the day. All right. Hope you found it interesting. Thank you for watching.